Lumen Technologies, is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale, so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. Lumen has no growth, in fact negative at negative 15.73% per year going forward. We're not in the business of finding stocks that are shrinking at such a rate. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio, to me, is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. Lumen has no PE ratio. Hype around the stock is at an all-time high fueled by pure speculation. Dividends should be an obvious metric and something that a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating, you're not investing. Lumen doesn't pay out a dividend. Not surprising when you have shrinking earnings and aren't profitable. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. Lumen has failed management with an ROE of negative 118.1%. If you invested $1 in the stock, you'd expect them to lose 18 cents. Just terrible. Free cash flow is my way to evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. Lumen has terrible cash flow to the tune of $1.71 billion. With everything else wrong with the company, this is the only bright spot, and it's still bad. Okay, as I said, these 5 metrics we just went over tells me what kind of business we're dealing with. With a business grade of 1, we're dealing with a failed business. There's nothing good with this company, unless you're holding for a Wall Street Bets event. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, Lumen is a failed business, but let's see what the price tells us in terms of investability. Nonetheless, Lumen Technologies is worth 15 cents per share. Right now, we're looking at a very expensive stock. The true price is so far removed from what it's trading at right now. And now that we've got all the numbers down, we need to put it all together and get our final grade. Lumen Technologies has a final grade of 1, and that makes it a failed long-term investment. For me, there's nothing good here. This is a pure speculative play and any long-term investor should avoid at all cost. But hey, after this video goes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely and as always, take care of your money.